Easy on the beat, boy.
Wow, how's it going? Everybody, how you doing all? This is Emiya Hilson here. I am actually going to be doing a live stream on the earnings report. So if you're interested, would love to have you guys join in, your discussion and all. And let's get it started. We have Revolve, which is basically a retail company in the millennial space in a way. So I'd love to just really talk to you all about this company, because I really like the products in a way. So yeah. So yeah, this is one of my companies that I really love, and I've invested in this company since last year, I believe. Last year in summertime, so it's almost been a year, and I like their products. Obviously, their products are amazing. I don't use their products. I'm not a girl. But you know, there's just so much incredible following base that they have for this product. So I'm just very excited to just be a company and an investor in this company, and hopefully this continues on throughout the entire decade in a way, because I think they do have great potential to really be one of the most important retail companies out there, especially for millennials and Gen Z. Yeah, these are all their products. Wow. Do they have new models now? I mean, all their models are there's forever. They can always reuse the models, because no matter the age, there can always be newer models in a way. So the model industry is pretty huge itself, and yeah, I like it. I like the products. I like the presentation of their products. How management has dealt well with this team so far, the entire pandemic in a way, adapting their business model. Yeah. So we'll wait for earnings to come out, and then we'll see what we have. But I am optimistic about it. I think they are gonna, probably this quarter, I think they're gonna have lower earnings compared to last quarter because of the supply issue and the Apple iOS ad problem. You know, they talked about that during the last conference call, and I think they'll be alright. You know, I think compared to last quarter, they won't do as well. That's why you have a decrease of revenue. What can I do? What can I say? Let's see how Skills is doing, my other company. Are they doing well with their NFL? Ooh, I'll probably want to know a little bit more about that. What's the conversation like? We'll see. Dun, dun, dun. Now, Revolve is such a underrated company. It's still small, but the thing is, its popularity hasn't been that big to Wall Street yet. And I think once it gets bigger to Wall Street, it will definitely be like a 10 billion company. It has the potential to do that. You know, you have all your celebrity, influencing power, all the makings of a great company. I don't think this is supposed to be in. It's supposed to be in education in a way.
When she on the beat, boy.
Earnings are good. Low float, significant shorts. If earnings are good, hold on to your hats. Well, we'll find out. We'll find out very soon how it is. Why haven't I on here? It's weird. I was like, where's my reaction in a way? I don't know. Weird. Bought my first 100 shares at $18 and change. Been loading up nearly every week. This is a buy and hold. My portfolio says so anyways. Mark last year, and the company is clearly going to show significant growth, and they already have 4 million followers on Twitter. Still a young company. Good luck to all longs. Good luck to all longs. I am a long-term investor, right? So I am a long-term investor. So I hope everyone does well. You know, that's what I hope for every company. This is one of my big investments. So hoping everyone does well. And I think this is going to be one of the premier retail companies that we have in North America. You know, this will definitely live up to its hype. And they do have all the different types of analytics in a way to help their business. They have the influencing power with the models and all. And they have a great quality product, right? Clothing wise, right? Luxury clothing, you can say. They also have middle class clothing for a lot of people. Oh, that's why I'm a proud shareholder. And even though the price has gone up so much, I'm not really selling out because it's like, what other retail companies can I get for a gain like this, right? People compare to Lululemon, but I'm like, you know, Lululemon, they're really successful in their own way with sport athletics. They're in a different category. There's more of a luxury wear department, right? Like real luxury wear. So let's see what kind of earnings we have. There we go. Earnings are announced. Let's take a look at it. Oh, we have one viewer right here. Hello, whoever you're watching. Thanks a lot. We're gonna take a look at it. Let's take a look at the presentation and then results. Why are people going crazy right now? Let's see. So what was expected? I'm just curious. 14 cents of profit, $214 million. We'll see. We'll see if they can beat that. I'm just curious. We delivered record quarterly net sales in 2021, highlighted by 62% growth year over year and 58% compared to 2019. A meaningful acceleration from the 41% growth reported for the second quarter. I'm also excited to see this clear signs of increase. Now let me highlight all this stuff. These are all good stuff to look at. I'm also excited to see the clear signs of increased customer engagement in the third quarter, including record quarterly growth in active customers. That's very huge in itself. Wow. Our third quarter results reinforce our belief that our competitive strength will enable us to continue to thrive as we transition to a post-pandemic world, said co-founder Michael Mente. And the CEO is Mike Karanikolas. The two Michaels. Our current momentum and the strength of our brand is based across Revolve and Forward. We are particularly excited by a recent announcement that Kendall Jenner is our creative director. Kendall brings incredible creativity and passion to the role that we believe will extend our reach and appeal to a broader base of net broader based audience of next gen luxury consumers than ever. And that's why I feel this is one of the best luxury retail companies out there at the moment. You know, there's a lot that this company is doing right, and that's what I'm thinking. Love to have you all. By the way, do you guys hear any echoes or something? Probably not. So what's the net sales? Oh my gosh! 244 million? 244 million? Am I seeing numbers wrong? That's pretty amazing. 244 million. In this environment of supply chain problems? Okay, that's impressive, but let's hear them talk more about it. And the 62% year-over-year growth, gross profit 134 million, 83,000 compared to last year. 83 million, that's 134. So the gross margin hasn't really changed in a way, but the net sales, very impressive numbers, very impressive. Net income as well, a slight decrease, and I'd like to know a little bit more about that, but that growth is massive in a way. Holy. Free cash in a way, that's a big decrease as well. So I'd like to know what exactly is up with their profitability in a way. Why is it affected in this way? Is it because of the supply problems, or what is it that they're spending? Is it marketing problem? Is it marketing that they're spending a lot of money in? Active customers. Okay, that's a nice amount. I think that's 1.6 million. 12% growth over growth. 60% more orders placed compared to last year. Wow, people are going out now. They really are going out. Average order value is also increasing. That could be just because supply problem. You gotta increase the prices. People are still buying as well. Yeah, and this is talking about their stuff. Anything really worth talking about, noting about? Not really, actually. Earnings per share 22 cents. What is that in net income? About 16 million. And you compare it to here, still beating highest estimates as well. Impressive in that way. I thought it would be even higher then. Because when I look at this, when I looked at this number, I was like, oh, that's a bit low. But still very impressive year over year. Now let's take a look at the different segments. They got Revolve, obviously for more middle class, and then Ford segment. That's the more of the luxury department. Net sales 204 million, year over year increase of 56%. And then you also look at their Ford segment, which is 95% growth year over year. That is huge right there. You know, before it wasn't that big part of Revolve, and then that wasn't a big part of this company's revenue, but now it's starting to be there. So 40 million out of the 244. Let me do my calculator. That's about 16% revenue. So you probably see it go up to 20% or even 30%. But most of their majority revenue would come from Revolve, because that's where the customers are. So I think on the conference call, you're gonna hear a lot of talk about this Ford segment. Domestic net sales increased 65% year over year, and international net sales increased 49% year over year. Big numbers right here. Let's see how you're expanding internationally. International expansion was broad-based with all major regions, contributing to net growth during the quarter. Net cash provided by operating activities was $1.9 million for the quarter and $68.4 year to date. Free cash flow was $1.3 million for the quarter. The 10% year-over-year decrease in net cash is because of meaningful inventory investments to support the improved demand for our products in 2021. Something like that. For products in 2021 compared to $30 million reduction in inventory during the comparable period in 2020, driven by our initially aggressive coronavirus response to managing inventory and enhancing liquidity. Is there an echo? I'm just curious. Is there an echo somewhere? Is there an echo? I'm just curious. Probably not. Good, no echo. Balance sheet. Strong cash flow in recent quarters has strengthened our balance sheet. Take a look at cash. Seems like their cash increased by about 54%. That's huge. What about inventory? Inventory as of September 30th is $141.8 million, increase of 19% compared to June of this year. Inventory increased $68.2 million year over year from an inventory balance of $73 million as of September 30th, which had been meaningfully reduced due to our aggressive COVID-19 response during 2020 to manage inventory and enhancing liquidity. The current inventory balance reflects our business momentum exiting the third quarter of 2021, as well as our ongoing efforts to successfully navigate the supply chain challenges. We intend to invest in our inventory position to support consumer demand. Okay. Now, what's the results of that? Strong growth in the first three quarters continued into the fourth quarter, with net sales in October broadly in the range of our third quarter growth rates. Overall, we are excited about our recent momentum across the business and encouraging growth in active customers during the third quarter of 2021 that we believe illustrates how well our brands are resonating with each generation, with next generation consumers globally. We remain conservative in our optimism as coronavirus and supply chain challenges continue to present us with daily challenges and have negatively impacted certain aspects of our business and sales in different regions. Okay. Good pace so far. Now conference call, get on in about 10 minutes. So selling and distribution, marketing. Marketing is huge. I know that. You know, just because the economy is opening up, that's why you have to spend a lot more expenses. You know, your expenses almost doubled, right? Of last year. Normal. But your revenue is good. Your revenue is good. But the thing is, your net income is attacked a lot because of your spending on marketing. But you know, in the end, it's gonna be worth it for all your customers and all. Joshua, hey, Joshua, have you heard about this company? They're called Revolve. They're like an online retailer for girl clothing. Except they have like models and all that stuff to do the advertisements. So it's a very, very, in a way, expensive product. More of like middle class to high class, but they've been performing so well. So yeah, a lot of girls might like this company. I think if you ask your girlfriend about it, she might know. She might know. I like the cash that they added this year compared to last year. That really gives them security. They don't have much debt in a way. I don't really worry about that. They are good for that. Cash flow. How much cash you have available to you to use. A good amount as well. Cash in the period. Yep, not too bad as well. I like that. And then let's take a look at the revenue breakdown. Oh, as I was saying yesterday, the Safari Zone, the rest of the Pokédex, new Galarian forms, and new area are likely to come in Sword and Shield. Oh, I wonder why they're doing it though, because you know everyone's moving on to Diamond and Pearl. Is there a reason to do it? Yeah, check out the company, Revolve. It's popular in North America. Yeah, it's mainly just for luxury or like middle class wear. And the cow pile. Hey, how are you doing? The cow pile. Are you an investor in Revolve? Just curious. Let me check out the cash flow because I think I see a big hit in some way. Financing, operations. Let's see, where is it? It's not too bad, honestly. Do they have more cash now? But I want to see the cash flow in a way. The net cash provided by operations for quarter 3 dropped a lot compared to last year. Oh, okay, quarter 3 net cash provided by operations. Where's that? Isn't it this one? Net cash provided by financing, net cash used in the... Oh, right here. There, this is the column that you're talking about. Thank you, thank you. You have about 100. Yeah, I think the thing is, that's something like you can pick on, right? That's not good. You know, it should be increasing. You know, you obviously want it to increase, but I think they spent so much. They really spent so much this quarter on marketing. Look at it. Where is the marketing? They spent almost a double. They spent double, at least a double, and in the end, their income, it dropped, right? Look at the net income compared to last year, right? That's their profitability in a way, right? So I give them a pass for that in a way. You know, obviously you want them to do better, right? Because if your net sales is better than last year, your net income should be as well, right? But oh, sorry, I sneezed. But I'd like to see what management has to say about this. You know, what's exactly causing the, you know, the profitability in a way to not have that much net income. But I don't really worry too much about that. I think as a company later on, they will be able to earn back all that. It's the confidence that I have in this company. Like, look at the margin. Where's the margins? Right here. It's relatively the same in a way, right? Nothing's changed much in a way, right? But I think it's just the challenges that they have with coronavirus, supply chain. I'd like them to talk about the iOS, the Apple iOS issue, and see how much it's affected them. You bought in November 2020. So that was like when there's the reopening, right? Interesting. Okay. revenue breakdown. Look at the Revolve. No, not look at the Revolve segment, but look at the Forward segment. This is gonna be a big. It's still obviously Revolve is going to be a big part of their earnings, but Forward segment, more of a luxury wear, is going to be important. You know, it's gonna be about, I can see 20% of the revenue in the future. It's only about 13% right now, but you can see that number slowly going up. And you're gonna expect management to talk a little bit more about this as well. You know, what's the rise of that, what's causing that, and what do they intend, what other plans they have for this. Gross profit is relatively the same. Now I know they expanded in America, right? I think they talked about 60% expansion, and then internationally as well. That's a good number too. Love to see that. Yes, as you know, as years go by, this number should increase more and more. Double digits every year expected, honestly. And then look at free cash flow. Yeah, right here. This hurts. Look at that. 1.3 million versus 13.8 million last year. Like to know where's all that mostly cash gone to, right? Is it going to other things? And just want to know exactly where's that big decrease coming from. Active customers, nice increase. About 10%. That's okay, honestly. Orders placed, that's huge. Look at that. People are more confident in going out and wearing different clothing. So the amount of orders that's been placed is good. And then people are willing to even spend more per order. That's about like 10% compared to last year. Anyways, let's take out the conference call if I could go in. So yeah, let's take a look at conference call. Conference call, let's go webcast. So Cowpile, or anyone else watching right now, what do you guys all think of the quarterly report so far? Is it like meeting your expectations? Not meeting expectations? What's up?
Good afternoon.
Oh my gosh, perfect timing.
I'll be your conference operator today. At this time, I would like to welcome everyone to Revolve's third quarter 2021 earnings conference.
Did you guys hear the call?
All lines have been placed on mute to prevent any background noise. After the speaker's remarks, there will be a question and answer session. If you would like to ask a question during this time,
honestly, the first 10 minutes is like them just repeating everything that's been said on the financial highlights. But I don't want to talk. You know, last time I was talking about it and people asked me to shut up and stuff. They want to hear. I'll let you guys hear. You guys want me to talk? I'll talk.
Of investor relations at Revolve. Thank you. You may begin.
Good afternoon, everyone, and thanks for joining us to discuss Revolve's third quarter 2021 results. Before we begin, I'd like to mention that we have posted a presentation containing Q3 financial highlights to our investor relations website located at investors.revolve.com. I would also like to remind you that this conference call will include forward-looking statements. These statements include our current expectations regarding the...
Alright, first few minutes is like nothing. So, Venti, what it is that Revolve, what I'm doing right now is looking at the report card of a retail company called Revolve. Revolve is a North American clothing company. You know, it's more for luxury and middle class clothing for girls. Simple as that. And then they reported their earnings, how well they're doing. If they do well, the company is worth more. If they don't do well, the company is not worth as much. Simple, right?
In today's press release, as well as other risks and uncertainties disclosed under the caption Risk Factors and elsewhere in our filings with the Securities and Exchange Commission, including without limitation our annual report on Form 10-K for the year ended December 31, 2020, and our subsequent quarterly reports on Form 10-Q, all of which can be found on our website at investors.revolve.com. We undertake no obligation to revise or update.
Okay, I'm done hearing that. We'll just wait. So yeah, that's what they have. They have a lot of different products. and they're mostly advertised by like models in a way, and social media influencers and all that. Simple, right? I probably explained it to you in a very simple way, and that's what I like to do. Just explain it in a simple way. And what we're listening to right now is that they released their report card, right? And then now they're gonna do a call about it, like a conference meeting about it. Like, here's what we did. You know, any questions you guys have for us? In a way.
Of each measure, their limitations, and our rationale for using them can be found in this afternoon's press release and in our SEC filings. Joining me on the call today are our co-founders and co-CEOs, Mike Saranicolas and Michael Mente, as well as Jesse Timmermans, our CFO. Following our prepared remarks, we'll open the call for your questions. With that, I'll turn it over to Mike.
Good afternoon, everybody. We're excited to update you today on the strong momentum in our business that continued to build during what was an incredible third quarter.
Have I heard of AKA
There are
brands?
3 key points that I want everyone
Nope,
to cover
let me search it up.
today. First, we delivered record top-line results in the third quarter, highlighted by 62% year-over-year growth and 58% growth on a 2-year basis versus the third quarter of 2019. This is an acceleration of 17 points compared to the 41% 2-year growth rate we reported for the
Another
second
fashion
quarter of
company,
2020.
okay.
The strong revenue growth trajectory discussed on last quarter's earnings call improved throughout the quarter, and the positive revenue trends have continued through October. What's gratifying is that the strength in our top line is broad-based, with net sales in the Revolve segment further accelerating in the third quarter, while our Forward segment delivered
So
nearly
it's about
double-digit
business
growth
clothing?
year-over-year.
Is that what it is? AKA?
Second, our brands are extremely well positioned in the market, and the momentum of our brands, driven by our strong assortment and innovative marketing, is generating increased customer
Whoa, that's
engagement.
heavy fashion right there.
Last quarter, I discussed our plan to invest heavily in marketing and brand building initiatives during the third quarter. While we expect these investments to provide long-term benefits, we are thrilled with the early returns. In true Revolve style, we stood out during New York Fashion Week, delivering impact and awareness, innovation, and redefining marketing for the modern fashion brand. I'm equally excited to see the clear signs of increased customer engagement. Traffic in the past few months has accelerated to well above levels before COVID-19. And we are generating more revenue per traffic session, helped by our customer increasingly buying from us at full price, as well as a shift in category mix to higher price points. You can see the increased engagement in our results, with orders and net sales generated per active customer accelerating in the past 2 quarters. Even more exciting is that our active customer growth itself accelerated in the third quarter, resulting in record levels of quarterly growth in active customers by a wide margin. It's also compelling to consider that the substantial majority of our newly added customers are buying from Revolve and Forward at full price, which speaks to the longer-term opportunity. Our experience tells us that customers acquired at full price generate a higher lifetime value. Third, nowhere in our business is the brand momentum more evident than in our Forward segment. Based on publicly reported data, Forward has been growing well ahead of the luxury peers, and we believe we have just scratched the surface on what we view as a massive long-term opportunity to build a curated luxury platform for the next generation consumer. Setting the stage to continue our strong growth trajectory is our recent announcement of Kendall Jenner as the creative director of Forward.
Kendall Jenner,
We are
creative
beyond
director.
excited to partner with Kendall, who is the epitome of luxury fashion. She
Yeah,
brings
it's good to have her.
creativity and passion to the role.
She's a
that we
pretty
believe
influencing
will
figure.
meaningfully extend the Forward brand's
Kendall
reach
Jenner.
and influence. We're also
Oh,
very
she's same
early
age as me.
in cross-marketing our Forward offerings to
Okay.
the much larger Revolve customer base. Our launch during the second quarter of a Forward loyalty program that is fully integrated with our Revolve loyalty program once again provided a powerful contribution to Forward's growth in the third quarter. I'm encouraged that month after month, we are driving increased overlap between Revolve and Forward active customers. Yet, with a very low percentage of overlap today, we think we have a compelling growth opportunity resident in our existing customer base. With that as an introduction, I will provide an overview of our third quarter results and recent developments. Our record growth in active customers and our ability to authentically engage with her through our marketing and merchandising resulted in record net sales of $244 million in the third quarter, an increase of 62% year over year and 58% on a 2-year growth basis compared to the third quarter of 2019. This is 17 points higher than the 41% 2-year growth we reported for the second quarter of 2020.
So looking at Princess Polly and AKA brands as a company, you say it's quite similar. It is millennial clothing in a way, and so they have to, I guess, be different in somehow. And I feel like the clothing style that they have is kind of like streetwear, like you said, right? That's their street clothing in a way, and so that's what makes them special, I think. But they do look like Revolve in a way. Feels like I am looking at Revolve website. So in a way, they're kind of like different competitors in a way. Is it? They look so similar. Then if they are quite similar, why don't you just put your money in Revolve? Or do you think AKA Brands has a much bigger potential for growth?
These results benefited.
Oh, did we lose? Did we disconnect?
Certain regions around the world have been temporarily impacted
Weird.
when lockdowns have been reimposed, serving as a reminder that we are not out of the woods yet. Equally relevant and very much in focus recently are the industry-wide supply chain challenges, which have had a progressively larger, albeit manageable, impact in the last several months. This came through in yet a further decrease in the percentage of on-time deliveries from our suppliers and in a further increase in our inbound shipping rates in the third quarter. Importantly, with a customer that shops at full price for our premium price point product, and with our strong gross margin, we are well positioned to manage through the increased freight costs that could remain in effect for several quarters.
Ooh.
Despite
like
the
that
many
confidence.
industry-wide challenges facing us, our operations and merchandising teams have done an outstanding job effectively navigating through this very dynamic environment. Our merchandising and planning team has not only been able to secure sufficient inventory, but more importantly, on-trend product that the customer desires. And our fulfillment, customer service, and support teams haven't skipped a beat, continuing to meet and exceed our very high standards that our customers have come to expect from Revolve. As a company passionately focused on the customer experience, I'm extremely proud that our Net Promoter Scores have further increased this year, even as the organization scaled up to manage through the incredible growth in customer demand. I'll wrap up with a brief discussion of regional performance.
Oh, regional performance.
By the strong domestic growth,
Right here.
which accelerated to 65% year over year in the third quarter, an increase of 55% on a two-year basis versus the third quarter of 2019. Our international business also continues to perform very well and represents an exciting opportunity for future growth.
Averaging up on
International
Revolve.
net sales grew 49% year over year, an increase of 75% on a two-year basis.
That's
versus
a
the
brave
third
thing to
quarter
do.
of 2019. Every major region contributed to our international growth, illustrating how well our brands are resonating on a global basis. Before I turn it over to Michael, I'd like to thank our team for their incredible efforts day in and day out. I'm proud of how
I wouldn't want to average. I wouldn't want to buy more now, honestly. If I were you, probably wait it out. It probably would drop down to $70 or lower, and afterwards buy it around the 60s. Or you could just not buy anymore if you feel you don't. If you, I mean, I think you want a bigger position. Is that what you're meaning? Like for me,
Challenging pandemic so far.
I don't like to average up.
Gradually transitioning into a post-pandemic world, and we are thriving. It is very clear to me that the same strengths we have demonstrated in the most recent quarter are positioning us to thrive for continued success over the long term. An important driver of our success is that our customers love us and deeply connect with the Revolve brand. As our customer resumes her socially active lifestyle, it's clear to me that her relationship with us is stronger than ever. She shopped with us.
Oh, I see. You don't want to average up. That's right. Yeah, you shouldn't. That's what it is. Just let it go. Just let it be. Just let it go as far as it can go, and then, yeah, be a proud investor. Princess Polly was a dumb name, but I saw them being promoted on Instagram by an influencer. I guess might be dumb to you, but like I guess it's memorable to a lot of people, and that's how they try to get the brand out there in a way. Their name. Yeah, Cowpile. How did you what other companies are you invested in?
And the key to understanding our customer is our depth.
And thank you for joining into the live stream. Really, really appreciate your interaction and all. Really helps. You know, I love doing conference calls and with not just myself, but with people, right? So thank you very much for joining in. Hope you you can check out some of my other videos as well. Love to have you on the channel.
critical long-term competitive advantage that is especially evident today. Despite the external challenges in the marketplace, we have been able to ensure that deliveries to our customers have remained at our very high standards during a time of shipping delays from retailers have become routine. Our customers remain as satisfied as ever, creating a strong foundation for this next stage of growth. Most exciting, we are addressing a very large market opportunity that continues to shift in our direction. Legacy retailers have been continuing to cede market share, yet they still represent tens of billions of dollars of market opportunity. We are primed and focused on a long runway opportunity to gain market share, acquire new customers, expand our share of wallet, and drive outsized growth over the long term. With that, I'm now excited to share with you some of the highlights of the quarter. We resumed our brand marketing activities with a bang. After several quarters of patiently waiting, we significantly invested into our brand in Q3 with great success. For the first time ever, we participated in New York Fashion Week and stole the show, very successfully competing against the incumbent heavyweights of the fashion world. We hosted a week-long brand marketing experience for both Revolve and Forward, and we did it our way, bringing innovation and excitement to our community of brand partners, influencers, and customers. A highlight was our immersive and elevated Revolve Gallery exhibition that reimagined the front row experience of Fashion Week while engaging with consumers in a new and exciting way. The visually stunning and interactive event brought together a curated and exclusive assortment of styles from emerging brands and our own brand, and uniquely featured a real-time shopping component. While New York Fashion Week events are typically exclusive affairs, we broke the mold by hosting 6,000 people over 3 days at Revolve Gallery, bringing together brands, partners, influencers, customers, and journalists in a first-of-its-kind event. In fact, it may have been one of the largest events ever held at New York Fashion Week. To protect our community, we adhere to appropriate safety precautions for the event, which is ironically held at the former site of a luxury department store that had closed in bankruptcy proceedings. It was great to host some of the analysts and investors on the call today at our opening night reception that was attended by an A-list crowd, including Kylie Jenner, Emily Ratajkowski, Megan Fox, Paris Hilton, and Camila Coelho, just to name a few. Not surprising, the event generated massive impact on social media with dynamic and engaging content across social channels. The social media posts with the highest estimated media value for the entire New York Fashion Week came from the private reception at our Revolve Gallery event, further illustrating the impact of our event. The incredibly deep connection we have established with the next generation consumer is evident in the high-profile sponsors of the Revolve Gallery event, such as Afterpay. Many top brands and personalities seek to partner with Revolve because they realize being associated with our brand can further elevate their brand in the eyes of the coveted and powerful millennial and Gen Z consumer.
That's such an important point. He said that influencers wanting to partner with us is a way of improving their brand image and getting their influence power even higher. That's huge. That's really, really important. And one of the big reasons why celebrities are going to continue to partner with Revolve.
And net sales returned to year-over-year growth in the third quarter. Importantly, initial jobs for the collaboration New York Fashion Week based on social media and press impressions and estimated media value. As a further sign of our brand momentum, we capped off the week by participating in the Met Gala, an uber-exclusive and incredibly high-profile event that is the Oscars of the fashion industry, bringing more fantastic exposure for our brand. Revolve being included in the Met Gala for the first time is significant and demonstrates the level of admiration we have gained from the broader fashion community. I'll wrap up with a discussion on Forward and why we continue to be excited about the long-term growth opportunity here. Forward's financial results for the third quarter were exceptional, with net sales increasing 95% year-over-year and 112% on a 2-year growth basis compared to the third quarter of 2019. Forward also delivered nearly 6-point increase in gross margins year-over-year this third quarter. Even more exciting is having Kendall Jenner as part of the team as creative director for Forward, extending our reach and appeal to a broader audience of next-generation luxury consumers than ever before. We have always had an extreme admiration for Kendall's style, creativity, and overall exquisite taste. We believe her multifaceted experience in the fashion industry and the vision she has outlined for Forward has the potential to transform our business. Only a few months into the role, Kendall has been extremely active. She hosted and participated in several New York Fashion Week events, including the exclusive Forward dinner and visits to emerging luxury designers she recommended, including one new brand that we are already in the process of bringing onto the Forward site.
Ooh.
You may have noticed her curation of Kendall's edits of her favorite styles on the Forward site. She also left a redesign of the Forward logo, further elevating her look to connect with the next generation consumer. And Kendall has created a compelling range of video and social content, including a Vogue feature that followed her around New York for a day in her new role as Forward's creative director. The video has been viewed more than 5 million times. Our brand, customers, and fans could not be more excited. Immediately following the news, traffic to the Forward website and mobile app increased significantly, and several weeks later, traffic has remained at higher levels than before the announcement.
Kendall Jenner product line, huh?
Doubled year over year in the
Check
month
it
of
out.
September, and growth in followers increased by more than 10x versus the prior monthly run rate. Another key driver of the success in the quarter and huge long-term opportunity is for Forward is the continued expansion of cross-shopping by Revolve loyalty members on our Forward.
Okay.
More of our Revolve customers become aware of the incredible offering and benefits of shopping on Forward. We have only recently started to invest to fully leverage our broader platform and customer base to cross-market the Revolve and Forward offerings to maximize our long-term opportunity. These early results of our efforts are very encouraging, highlighted by our spend on Forward by Revolve Loyalty Club members continuing to increase sequentially, and a steady increase in the percentage of Revolve customers who also shop on Forward every single month since we launched the Forward Loyalty Program. You can't talk about fashion without talking about Revolve and Forward. We believe we have what it takes to be the destination for the next generation consumers seeking curated premium and luxury products, and we are just getting started. The competitive differentiators I outlined earlier give me great confidence in our opportunity for growth in the global e-commerce market for years to come. We are clearly taking market and wallet share from legacy players with our scale and brand built over the past 18 years. We are also well positioned against newer entrants. We couldn't be more excited about the next phase of growth ahead of us. Now I'll turn it over to Jesse for our discussion of the financials.
Okay, take a look. He recently bought into Zita Global Holdings, a marketing AI company. It's a relatively small company. It's a small cap company. And I think it's not a bad investment. AI marketing, advertisements and that. It's advertisement space is huge in a way. And so I don't really know too much about the advertisement space. But that's a really interesting investment. You have a technology play. I know when you go advertisements, you're going up against Facebook in a way, Apple, Google. So you're going up against some pretty heavyweight competitors, and tough competitors too. But good luck to that investment.
By territory, both domestic and international year-over-year, respectively. By segment, Revolve segment net sales increased 56%, and Forward segment net sales were again exceptional, increasing by 95% year-over-year in the third quarter. A highlight of Q3 was active customers increasing by 124,000 compared to the second quarter of this year, our highest ever sequential quarterly increase by a wide margin. This expanded our active customer count to 1.7 million, an increase of 12% year-over-year. Our customers placed a record 1.8 million orders in the quarter, an increase of 60% year-over-year. Average order value, or AOV, was $276, an increase of 19% year-over-year, and an increase of 8% sequentially from just the second quarter. A key driver of the growth in AOV year-over-year and sequentially was a further shift in mix back to higher price point merchandise, such as dresses, handbags, and shoes, as well as the continued strength coming from the Forward segment. Shifting to gross profit, consolidated gross margin was 55.1%, a decrease of just 16 basis points against a very strong prior year comparison. Yet gross margin increased 148 basis points on a 2-year basis compared to the third quarter of 2019. Importantly, our gross margin was ahead of the gross margin outlook we provided last quarter, as healthy inventory and consumer demand dynamics across both segments led to another strong percentage of net sales at full price in the third quarter, and a year-over-year decrease in the depth of markdown. These positive contributors to gross margin were partially offset by a decrease in the mix of own brands as a percentage of Revolve segment net sales, consistent with the outlook we shared on recent investor conference calls. Moving on to operating expenses. Consistent with the outlook we shared last quarter, marketing expense as a percentage of net sales came in at 19.2% of net sales in the third quarter, well above our historical trend line. I couldn't be more excited about the early results of our investments in brand marketing that paid dividends over the long term. the level of marketing investment has since returned to historical levels in the current fourth quarter. Selling and distribution as a percentage of net sales increased year over year and on a sequential basis, consistent with our prior commentary to expect deleverage with a normalizing product mix, leading to a further increase in return rate in the third quarter of 2021. The other two line items, fulfillment and G&A expense, leveraged year over year, resulting in part from automation efficiencies in our fulfillment center. In fact, we have lower fulfillment headcount today than we did 2 years ago. During the quarter, we also realized benefits from capacity utilization and scale efficiencies, resulting from our robust 62% growth in net sales during the quarter. Net income and adjusted EBITDA decreased year over year due to the increased brand marketing investment. However, net income and adjusted EBITDA each increased meaningfully versus the pre-COVID levels in the third quarter of 2019. Also, looking at the 9 months year to date, net income and adjusted EBITDA increased by 86% and 59% year over year, respectively. Moving to the balance sheet and cash flow statement. During the third quarter, we continued to invest in inventory to position our assortment to support very strong consumer demand and to ensure we have adequate available inventory considering the current supply chain challenges. As a result, inventory increased by $23 million during the quarter to $142 million. Even with the investment in inventory, we generated $1 million in free cash flow in the third quarter and $67 million for the first 9 months of 2021. The decrease of 10% year over year in free cash flow for the 9-month period reflects the much larger inventory investment this year compared to the first 9 months of 2020, when we significantly reduced inventory to preserve liquidity. Cash and cash equivalents net of borrowings at September 30th were $222 million, an increase of $78 million or 54% from $144 million as of September 30, 2020. And our balance sheet remains debt-free. I'm especially proud of our incredible results considering the challenging and uncertain macro environment. It appears the supply chain issues are not going away anytime soon. And right when we think we're turning the corner on COVID, new challenges emerge around the world. So we feel very good about our ability to navigate the challenges as demonstrated by our exceptional results this year. Nonetheless, these headwinds are real risk factors that we have to deal with day in and day out. Now, let me update you on some recent trends in the business since the third quarter ended and provide some direction on our cost structure to help in your modeling of the business. Starting from the top, the strong top-line trends we experienced in the third quarter continued through to the month of October, with a growth rate that is broadly in the range of our third quarter growth rate. While we are very excited about the recent top-line trends, we would not count on the same incredible growth rate that we've experienced in recent months to continue in the balance of the fourth quarter, during a time when the space is flooded with marketing and promotional activity. Shifting to gross margin. We are extremely pleased with our gross margin performance, with gross margin higher by approximately 350 basis points year to date versus the comparable period in 2020, and 120 basis points higher year to date on a 2-year basis versus the comparable year to date period in 2019. As a result, we are again raising the outlook for gross margin this year versus what we have shared previously. We now expect our full year gross margin in 2021 to be approximately 54.5%, above the already upwardly revised full year gross margin outlook of 54% I shared last quarter. Fulfillment. With a very efficient fulfillment performance in recent quarters, we expect fulfillment costs to be approximately 2.5% of net sales for the fourth quarter, which is approximately 40 basis points lower year on year and showing even more efficiency when compared to 2019. The slight anticipated uptick compared to the third quarter of 2021 reflects normal seasonality, as fulfillment costs have increased as a percentage of net sales on a sequential basis from the third quarter to the fourth quarter in 4 out of the last 5 years. For the fourth quarter, we expect selling and distribution costs to be around 16% of net sales, which is slightly higher than the 15.7% of net sales in the third quarter, and up significantly from 13.4% of net sales in the fourth quarter of 2020. You may recall that shipping costs comprise the majority of the selling and distribution line item, and consistent with our prior commentary, we are seeing pressure on this line from increased return rates year over year as our product mix normalizes, and from continued cost pressures that are impacting the industry overall. We expect this pressure to continue through 2022 at rates similar to that of our expectation for Q4 2021. Moving on to marketing. After a very busy and exciting third quarter, we continue to expect marketing expense to revert to its historical level of approximately 15% of net sales in the fourth quarter, consistent with our commentary on last quarter's earnings call. General and administrative. We expect G&A expense to be around $26 million in the fourth quarter, nearly $2 million higher than in the third quarter of 2021, as we continue to invest in the team to support our rapid growth and expansion. Lastly, let me touch on our tax rate. Our effective tax rate in the third quarters of 2021 and 2020 reflect tax benefits realized as a result of the exercise of non-qualified stock options. Absent such tax benefits in future quarters, we expect our effective tax rate to be around 24% to 26%. To recap, we are incredibly excited about our recent results, with record growth in active customers and strength across all segments and major geographies in the third quarter. While mindful of continuing uncertainties and potential headwinds in the current environment, we are focused on the long term and investing in the business to capitalize on the incredible growth opportunity ahead. Now we'll open it up for your questions.
Thank you, sir. At this time, I would like to remind everyone, in order to ask a question, press star, then the number 1 on your telephone keypad. We'll pause for just a moment to compile the Q&A roster. Your first question comes from the line of Erinn Murphy of Piper Sandler. Please ask your question.
Great. Thank you. Good afternoon. My first question is on the forward business. The strategy is really starting to pay off. I'd love how you could maybe help us think through how big this business could be over time, and if you could share a little bit more about what Kendall's relationship with the brand is bringing from a brand relationship or vendor relationship perspective. And then just a second follow-up on the holiday season. Can you just share your perspective on the promotional environment into holiday? Thank you so much.
Good to hear, guys. And I think the forward opportunity is just immense. We're competing against many old school sellers that still have billions and billions of revenue, as well as competing against large online players who are struggling. We've seen competitors.
Hey, Michael, your audio is cutting out.
You want to go in? You want to go then? I don't know what.
Yeah, sure, I can take it. Yeah, as Michael was saying, we think it's a really large opportunity. As you know, the luxury market is huge, and Ford is still a relatively small player, but it's positioned with the elements that we think are going to set it up for huge long-term success. Certainly you look at just its trajectory and momentum compared to the other players in the market. It's really on fire right now, and then you combine it with having Kendall Jenner as creative director. I couldn't think of any person in the world, honestly, that we'd want for that position more than her. And then you also combine it with the Revolve customer base, which is quite large, and the opportunity to transition that customer base to Forward. And incredibly, every single month we've seen sequentially higher overlap in shopping on the Revolve customer base on Forward since we launched the loyalty program. So there's just a lot of ingredients for success. It's a market size that's in the tens of billions. So we feel really good about where that business can go over time.
Yeah, and then maybe on that second piece, this is Jesse. It's a little bit early to see what's going on in the promotional environment for the holiday season. We are seeing some early promotions, so that's giving us some caution. And then just to back up and kind of set the stage, we're not overly seasonal. We're not a gift-giving destination, so this isn't a period where we're overly active, and we see a lot of activity in the market just in general. And I think, holiday season can be volatile in any season or in any year. And then this year in particular with supply chain and everything else going on, we're just being very cautious on that last couple months of the year to see what happens.
No, I just wanted to correct that. Hopefully you guys can hear me, but it's not tens of billions. It's actually several hundred million, a billion. So massive potential here, and we're positioned perfectly.
Your next question comes from the line of Lorraine Hutchinson of Bank of America. Your line is open.
Thank you. Good afternoon. I wanted to follow up on some of the comments you made around the supply chain and just get a sense for how comfortable you are that you'll have the product you need for holiday, and then also what you're hearing from your brand partners about deliveries for the first half. Thank you.
Yes, on the supply chain side, we have started to see some delays there, more delays than we'd like. I think compared to the rest of the marketplace, we're positioned pretty well, and we feel good about our inventory position heading into the holidays. Is it perfect, the same as a world with no challenges? No, but I think compared to others, we're doing well, and I think that reflects in the results that we saw in the third quarter, as well as the results we're continuing to see in October. And then heading into the first half of next year, it's something that we certainly have our eye on. Again, we expect some challenges, but we expect to be able to manage and navigate those challenges as we typically do.
The next question comes from the line of Oliver Chen of Cowen and Company. Your line is open.
Hi, the revenue growth continues to be really impressive, and the active customer growth as well. What should we think about for longer term in terms of your revenue growth algorithm, and also as you start to anniversary some tougher compares in Q1? Would also love an update on private label as you think about it near and longer term. I know there's opportunities at both divisions. And then the third question on Forward, congrats on all the momentum there. What do you see happening with the assortment over time as you think about breadth relative to depth and where you want to go with the nature of inventory buys and pricing? Thank you.
Sure, Mike here. So with regards to the long-term growth algorithm, we wouldn't make any changes to our long-term projections. Certainly, experienced a phenomenal moment several quarters, and we feel really good about the momentum in our business. And more importantly, really good about the long-term opportunity. We think we're positioned better than ever. We think our brand is resonating with consumers. Our ability to manage our inventory versus others, we think is really shown during this time, and also our ability to execute at high service levels. So, we feel really good about our long-term trajectory, but at the same time, it's not the sort of situation where we would make a change to our long-term projections at this time. I guess the second question with regards to the private label, Michael, do you want to dive in there?
Yeah, the opportunities there remain, greater than ever. Well, of course, we scaled back, and we've begun the acceleration. In this coming year, you'll see a lot more from us across categories, across brands, across collaborations, and you'll begin to see things expand into the Forward zone as well, which is, completely untapped. I think that, the customer, as always from us, comes for emerging designers, and we've been able to consistently create exciting emerging designers. So you'll see a lot more of us in the same format as you've seen us in this past New York. So very excited for what's to come.
Okay, thank you. And on Forward, would love your thoughts there.
Do you want to take the Forward inventory, or do you want me to, Michael?
And what was the question again? Or you want to jump in, Mike?
Yeah, I'll jump in. So, with regards to Forward breadth in depth, we continue to see there to be an opportunity to enhance Forward's inventory assortment. That's one of the things we've talked about on past calls, that with all the things Forward has going for it, what's really exciting about the future is it has a lot of opportunities on the assortment side. So we're continuing to increase the breadth of inventory as well as the depth that we're able to sell to consumers, and that's been a powerful driver of results.
Your next question comes from the line of Mark Altschwager of Baird. Your line is open.
Good afternoon, and congrats on the ongoing momentum. I guess first, just on the marketing front, it seems like you're seeing some nice response to the marketing initiatives with the acceleration in client ads this quarter. I guess as you realize some of the benefits from these brand investments that are ongoing, what do you think is an appropriate rate of net customer ads that we should anticipate in the quarters ahead? And then separately, on margins, Jesse, I guess it looks like you're on pace to close to hold the 2020 margins. I think if I got all the numbers correctly, the guidance implies maybe something in the neighborhood of 11.5% EBITDA margins this year. Just with the performance year to date, does that increase your confidence in the ability to sustain or even expand EBITDA margins beyond 2021? Thanks.
Yeah, sure. On the first one, on the active customers, really excited about the customer behavior in this last couple quarters and the last quarter especially. And it's coming from both new customers. We had record new customer adds, but also that returning customer. That returning customer has been more active than ever. And she came back in a big way in this quarter. And not just returning customers, but also lapsed customers. We saw that customers who had gone completely away in 2020 came back in this last couple quarters, and that ratio of that lapsed customer actually increased from Q2 to Q3. So we feel really good about the active customer growth. I think that's one dynamic, and the most exciting dynamic. The second one is that because that active customer number is a trailing 12-month number, we will layer on new higher performing quarters as we cycle out of lower performing COVID quarters. So the combination of those two for the next, at least a couple quarters, we should see that active customer growth rate increase sequentially before it starts to normalize kind of in the middle of next year at some point. And then on the EBITDA margins and long-term EBITDA margins, we feel good. We made a lot of investments this quarter that we believe will pay off over the long term. There is some cost pressures and supply chain and et cetera that we talked about. So we'll add some years.
I see. I'm not sure actually. Depends how busy I am, but I definitely will go back to Animal Crossing. I'm not sure if I will get the downloadable content. There's so much content already that I'm missing out. I think that's gonna be enough for me. And like Pokemon is coming few weeks, right? So I'm gonna really focus on Pokemon first. That's what it is. But I would definitely go on Animal Crossing once there's an update available tomorrow. Is that right? It's a free update available to all of us, right?
Your next question comes from the line of
here. Then I think on the owned brands, you thought that maybe it would cross over into positive year-over-year territory, perhaps at some point during fourth quarter. Maybe just check in on that, see where it is, if it's moved around at all because of the supply chain. And then the product return rates, they're back in about the low 50s rate. I know maybe a point or two below where you were pre-COVID, and I know as we talked about this through COVID, you thought that maybe they could stabilize a little lower than where they were pre-COVID. Is that still the thinking? Maybe anything you could tell us about the behavior you're seeing there? Is maybe that's done going up in the near term, or if you think it maybe goes back a few more points? Thanks.
Yeah, sure. So first on the AOV, definitely a positive impact from that forward performance and forward really over-indexing, for the last several quarters. And we see continued strength coming out of that segment, which of course carries the higher average order value. So that's definitely a contributor. The other piece of that is the record high full price sales mix that we've been operating at, and not just the full price sales mix, but also the markdown margin. So, kind of that full price customer behavior has been really strong, and strong for sure on a year-over-year basis, just given where we were at last year, but then also even higher than back in 2019. And as we've commented on in the past, and that's, kind of coming through in some of the margin gains, we don't expect that to last forever. We do expect that to come off of the highs, and it actually came off of the Q2 high that we experienced in this Q3, but still feel really good about the long-term full price mix there. And full price customers generally behave better over time than a markdown customer, so we're really excited about the record new customer additions this quarter that came through in a big way on full price. So that's on AOV. On own brands, I think we troughed out in Q2, so we're seeing a sequential increase in the mix of own brands from Q2 to Q3. And I think in that Q4 zone is probably still in the right range of crossing over from that kind of year-over-year increase in penetration. And then return rates. Return rates are increasing, as you can see, and that's largely due to the shift in mix back towards those higher return rate categories like dresses and away from the lower return rate categories like beauty that we had experienced last year. And also as we localize the international experience, that has an impact on return rate, but an overall positive experience and impact just on the overall P&L from a gross demand perspective. So I think we'll see it increase sequentially from here. We're still optimistic that we can be lower than that peak rate, but it will increase between kind of where we're at now and that peak rate that we experienced back in 2019. If you look at the dress mix right now, we're at 29% in the third quarter, and at our peak kind of pre-COVID levels, we're in the 32-33% zone in those peak Q2 periods where dresses are really high. So just to give some context on kind of potential movements looking ahead.
Your next question comes from the line of Edward Yruma of KeyBanc Capital Markets. Please ask your question.
Hey guys, thanks for taking the question. You guys are really early in identifying the influence opportunity, and I've argued you've done a better job than really anybody in the industry. It does seem though that a lot of other folks are trying to emulate this kind of micro-influencer strategy. I guess, have things changed on the influencer front? Is it harder to get the right influencers and have costs come up? And then just as a quick follow-up to previous calls, any impact that you're observing from IDFA? Thank you.
Yeah, clearly on the influencer side, things continue to evolve, but it's important to note that our influencer strategy isn't one strategy, it isn't a singular strategy. It's really a multifaceted strategy. So we work with the biggest influencers in the world, like literally like a Kendall Jenner, of course. We work the entire spectrum all the way into micro influencers with 10,000 followers. So I think it keeps us on our toes. Of course, things that we did years ago aren't as effective as they are now. But we have some new things coming out that we're excited to talk about that are just continued elevation of what we do. More tech-driven ways to work with influencers, and we're as bullish as ever as that this is an important part of our strategy, and we're super clear that it works, and we're super confident that we can continue to invest in a very strong way. Mike, you want to talk about
the IDFA? Yeah. Coming into the quarter, we certainly had some reservations about it and noted that it could cause some level of headwind. For the most part, we're pleased with how things played out. We felt like our marketing teams navigated it well, and on balance, you could call it net neutral. It didn't end up being as big a concern as we thought it might be.
The next question comes from the line of Camilo Leon of BTIG. Please ask your question.
Thanks, and I'll add my congrats on a great quarter. 2 questions for me. Number one, you talked about being happy about the early results and the returns from the investments in the Fashion Week event. I'm curious, can you share some of those early metrics that you're seeing, whether it's a boost in sales or engagement or what have you? And then longer term, is this something that you think can be your fall Coachella from a sales driver perspective? And then my second question is on gross margin, the gross margin guidance for the Q4 period. It looks like you're implying about a 300 basis point decline. And I appreciate the cautious stance on the potential for promotions to accelerate, but I'm curious, what are the other key driving factors that are behind the implied decline? Thank you.
Sure. So with regards to the marketing event question, we measure the success in several different ways. Certainly one of them is that we look at the trajectory of sales momentum and new customer momentum and customer engagement. And we saw really nice results for the month of September and the period in which we conducted the marketing activity. And we know based off past events that we've done, we have the ability to correlate the increases that we see there to a longer term effect that we see in the form of customer awareness and where new customers are first finding out about us and being inspired by us. So the early results looked great. Also all the metrics that we look at in terms of just general consumer awareness and impressions among consumers and reaction from consumers to the events that we're doing were all quite positive. So we feel great about those events. It was exactly the kind of investment that we wanted to make, and we're really happy with how it performed. And with regards to your question of could it become an institution like Coachella, the answer would be yes, it definitely could be. And we're still planning the upcoming year, and those plans could change over time. But at this point, we feel very good about the event, and we think it has potential to become an institution like Coachella.
Yeah, the only other thing I would add is that, of course, with a strong Coachella, a play that works for us in the spring, balancing it out in the fall is great, but this is a play that could be any time of the year. This is something that, of course, we did during Fashion Week, but this is an event that we can manufacture on our own. So it really opens up kind of the flexibility and possibility to, do things whenever we want on a global basis. So super happy with the results. It was, of course, something new, which always, carries a little bit of risk, but it is a huge win for us and something that we'll be able to leverage in a very strong way for many years into the future.
Yeah, and on the second piece, the gross margin there, I think important to keep in mind when looking at the year over year that the last year was not a typical year. So if you think back to last year, we kind of saw that step function from the first half of the year into the second half of the year, and it was really the tale of two halves where we saw that record full price, everything kind of working on a margin perspective. So Q4 was not a typical Q4 for us last year, so that was abnormally high. So that's one piece on the comp. So I think, probably balancing that with looking at the Q4 2019 and even earlier in, 18 and 17 to see the seasonality there. So I think one, a comp dynamic, and then two, a seasonality dynamic, and then three, just as we've commented in the last, couple earnings calls, as we build into inventory, as we work through inventory, that full price mix will come down, the markdown margin will come down. So we're building a little bit of that in as well.
Your next question comes from the line of Kimberly Greenberger of Morgan Stanley. Your line is open.
Great, thanks. This is Alex Straighten on for Kimberly Greenberger. I just have a quick question on both segments in terms of which categories within them at Forward and Revolve were doing well. Did you see any sort of certain ones that stand out on the further reopening? I know it sounds like dresses are doing better. And then also just the second question I have is on kind of a sense for how full price selling came in this quarter compared to last year versus even 2019.
Well, starting with
Sure.
merchandise.
Oh, sorry. Well, go ahead, Michael.
Okay. Merchandise mixes.
All right, I'll start. You jump in. Okay, on the merchandise front, I think as you'd expect, dresses coming back in a really powerful way. So on a year-over-year basis, plus almost 100% in that dress category. I think also important to call out that we do see that significant increase in these going out categories like dresses, but also beauty pulled out a year-over-year increase, and that was a phenomenal category for us last year in the kind of stay-at-home COVID time. So good to see that category still increasing. On the forward side, you see the handbags and shoes really continue to check, and that goes back to that. You can kind of link that back to the Revolve Forward active customer overlap, where Forward over indexes on the shoes and handbags, Revolve over indexes on the dresses, tops, etc. So it's a good complementary assortment on that front. And then I slipped on your second question.
Just on a sense for full price selling level, like
the full price
last year, versus even 2019.
Yep. Yeah, I would say over the prior year, higher than last year. On a sequential basis, though, we came off of that all-time high that we experienced in 2Q of 21. So, we're kind of starting to see that full price ebb. And then also on the markdown margin front, similar dynamic where we saw that record markdown margin last quarter. We're starting to come off of that record. So that, again, goes into kind of some of that forward-looking guidance that we're giving around gross margin for this next quarter. Versus 2019, we're still, higher than that historical really strong full price sales. So we still feel good about it, but it will come off those all-time highs that we experienced in the second quarter.
Great, thank you.
The next question comes from the line of Tom Nikic of Wedbush. Please ask your question.
Hey, good afternoon, guys. Thanks for taking my question. So we're going to just follow up on the gross margin commentary. So it kind of sounds like, you have a few things that'll pressure it in Q4 and maybe some normalizing promos and mix and things like that. Should we expect that to kind of persist into 2022? Do you think the the 2021 gross margin at 57.5 is maybe a little bit inflated, and maybe there's a little bit of normalization next year. Are there any sort of offsets to some of these pressures? Just trying to get a sense of the longer term direction of gross margins.
Yeah, for sure. And it's a great question. I think maybe stepping back for that full year of even 2021, that's 2 points higher for the full year on a year-over-year basis compared to 2020, and then a full point higher than 2019. So I think stepping back from the quarter-to-quarter dynamics, feel really good about the margin progression there. And I think to your point on offsets on the full price mix and the markdown margin, own brands. So as we mentioned, we kind of troughed out in Q2 on the own brand mix that has built sequentially into Q3, and we expect that to continue. And kind of going back to some of Michael's remarks earlier, and expect that to continue through to 2022 and beyond. So, for the full year 2021, we'll see a decrease in the mix of own brands before we see that increase again for the full year in 2022. And I think, as we've talked about before, the own brands carry meaningfully higher margin than a third party. And with the own brand reset that we've been working on over the last year, we feel, really good about the unit dynamics on that front as well.
The next question comes from the line of Bob Drbul of Guggenheim Securities. Please ask your question.
Hey guys, just got a couple of questions. I think the first one, for Jesse, the cash balance. Can you talk a little bit about just the uses for cash and what you're planning? With it keeps building. I know you're going to invest in some inventory, but it just seems like there's a lot of excess cash on the balance sheet. And then I have a follow-up question.
Yeah. First use of cash, especially this year, and you can see that in the inventory balance, is the reinvestment in inventory. And you can see the cash balance start to, kind of plateau where we're at now, where we've invested in inventory. The significant demand that we've experienced adds to the cash balance, but we're reinvesting that in the working capital. So, I think we're largely through the inventory rebuild. Now it'll start to balance out. I think second use of cash goes along with that, but just, working capital, investing in the marketing, investing in the business. We're pretty light on CapEx, as you know, so, not any meaningful CapEx investments planned outside of, historical norms. So then that leads to what else do we do with it? We are, we continue to look at things. We're being very disciplined, but M&A continues to be an opportunity for us. But we're being, very patient on that front as well.
Got it. And just a question on the, the Kendall Jenner appointment. In the interview process, which one of you guys played the heavy? Like, who was the tougher interviewer during that process?
That's always Mike. He's notorious for these impossible to pass programming tests, and I think that he takes big joy in that.
All right. Thanks very much, guys.
The next question comes from the line of Ross Sandler of Barclays. Please ask your question.
Hey, just to follow up on the marketing question earlier. So you obviously spent a lot as planned on marketing, and you leveraged a little bit in the third quarter. Mike, I thought the comment about IDFA being neutral was pretty bullish, given what we've heard from other folks in e-commerce. So I guess, could you just parse out, influencer marketing versus the Kendall Jenner versus your just classic performance marketing? Like, what was the bigger driver of the record net ads? And do you think that now that we're post-pandemic and everybody's just shopping more generally online than they were pre-pandemic and brick and mortar is suffering a little bit more, are you getting better bang for the buck on your influencer and performance than you were 2 years ago? Thanks a lot.
Yeah, definitely. So with regards to the marketing increases, consistent with our commentary on the past earnings call, as a percentage of sales, nearly all of the increase came on the brand marketing side and came from those really big brand marketing investments that we made in September. Some of the increase, a much smaller portion, did come from the performance marketing side, which actually the way we operate usually means that we're seeing good returns, right? Because the better the returns we see, the more we'll invest there. So there was a little bit of an increase on the performance side, but we were seeing phenomenal results throughout the quarter. So we felt really good about those investments. I think in terms of the landscape, it constantly shifts every quarter. Our feeling is that if you have a good offering for consumers, a brand that's resonating, a product that's resonating, that over the long run, you're going to continue to be competitive in the performance marketing space. And that's what we see. Quarter to quarter, there can be shifts up and down as different players kind of do different things for various reasons. And this happened to be a more fruitful quarter for us.
Your next question comes from the line of Matt Koranda of Roth Capital. Your line is open.
Hey guys, thank you. Two from me. So first one's on the net sales growth commentary quarter to date. I think you guys said broadly in the range of the third quarter growth rate. So just wondering if you could maybe just speak to the key drivers of net sales growth quarter to date in terms of order flow, AOVs, return rates, just kind of relative to what you saw in 3Q. For example, are we up year or quarter over quarter on AOVs? What do return rates look like relative to 3Q? If you can get a little color on that, that'd be helpful. And then just on the gross margin front, maybe not to beat the question to death here, but just wanted you to put a finer point on what's driving gross margin. Sort of the implied outlook is down quarter over quarter. So is it supply chain related, or is it the expectation of less full price selling? And then why should we expect full price selling sort of to decline quarter over quarter? Is that based on actual quarter to date results you guys have seen, or is that just kind of a general observation in the overall competitive landscape into the fourth quarter here?
Yeah, sure. On the first part, October, call it largely in line with the third quarter, both from kind of across the board, from top line growth, probably in that same range, being driven by continued increase in AOV on a year-over-year basis. So kind of, again, largely in line with the third quarter. Return rate in that same zone, maybe a tick higher as dresses continued to perform. But largely I'd say, the customer activity continued on that same, new customer adds really strong, returning customer / existing customer, really active. So, kind of the commentary that we've given on the quarter is very similar if we had to give more commentary on October. But again, adding some caution for that November, December time period, as that can be a volatile time out there. And then the margin, I'd say it's mostly due to that full price and markdown margin dynamic, less so due to the supply chain. The inventory's been booked. Freight, inbound freight is higher, but given the price point, the premium price point that we operate at, it takes quite a bit to move that from a margin perspective. So it's largely just due to that shift from the record full price that we've been seeing. And then also the markdown margin. Markdown margin coming off of the highs that we've experienced in the last couple of quarters. So hopefully that helps.
We have time for one more question. Your last question comes from the line of Dylan Carden of William Blair. Please ask your question.
Really appreciate it. Thank you. And greedily, I might sneak two in here, sorry. But just want to clarify on the private label, as you kind of ramp that back up, is it the case that you think by sort of the end of 22, you might get it back to sort of pre-pandemic levels, or given past experience, you're going to be more thoughtful about how you layer it in the assortment? And then just on the international front, I know the growth there was strong, but just curious if there's any commentary or color. You think you're benefiting because there's lockdowns or further restrictions in certain jurisdictions, particularly Asia, or do you think there's sort of a delayed potential benefit as those markets recover? Thanks a lot.
Yeah, sure. Sorry, on the first one, I lost your first one after you talked about international.
Just the pace of rollout of the private label now that you're kind of getting back into it.
Right. Yeah.
Thanks.
So no, we feel really good about the the improvement or kind of the sequential increase, the first sequential increase that we've seen in the last couple of years. I'd say it's aggressive to say that we'll get back to that 36% that we were at in 2019. It's probably closer. There's probably a line, and the line is probably less steep than it was in the past, as we are, being, I think, measured in our pace of expansion there. But we do expect to see a nice, healthy increase in the number of styles delivered sequentially from quarter to quarter. But again, I wouldn't say, 36% at that peak that we were at in 2019 is aggressive, at least for the next year. And then international, it's very region by region. I think, a couple of good examples. Australia, which was in lockdown for the bulk of the third quarter, was one of the lower performing, still a growth region for us, but one of the lower performing regions this quarter. And then you compare that with the UK, who came out of lockdowns earlier in the quarter that performed really well for us. Canada, China, really healthy regions for us on the international front.
Appreciate it. Thanks, guys. Nice work.
Thanks.
That's all the time that we have for questions today. I will turn the call back to the management for closing remarks.
Hey guys, thanks for joining us. One thing I just really wanted to, thank our team. The financial results, of course, are just incredible and speak for themselves. But, a layer below, all the operational metrics and all, the heart that went into, delivering these results it really does show. And, to the investor community, thank you for joining. We're super proud of, all that we've done. But also wanted to note that, we're still at the tail end of the pandemic and it's still not fully open. I think that there's, brighter and better days yet to come, so feeling good and not just over the near term, but for many, many years of continued dominating performance. So thanks for joining us and excited to chat more.
This concludes today's conference. You may now disconnect.
All right. So, finished. So thank you very much for joining in today. It's been a long conference call and a great earnings report. Thank you all to join in. Kyle Pyle, Joshua, Galaxy, all of you for watching. Thank you very much for your opinion and thoughts. Love to have you in the next stream as well. That's it for me.